If you're a swing trader or investor trying to navigate the current market environment, this video may be helpful for you. I'll be going through some of the setups that made the biggest moves coming out of a crash in 08-09. These are setups that fit my strategy, but the overall concept remains the same. Full disclosure, I just want to mention that I do not know if this crash or bear market is over. I am just preparing for when it is and showing you guys the best setups that came out of previous crashes. So we'll start here with DAN, a stock down 98.22% from its highs, then made a huge move up from its lows, about 3,000% from its lows. If you zoom in here, you'll see that after it made a move off the bottom, a couple 100%, it began to consolidate, build this beautiful support level, let all of its simple moving averages to catch up and cross over each other, and then gapped over this range, had a small gap over the range, and then blasted off. Flagged again here, a little high tide flag we call it, and then blasted off again. In this case, you could have bought here around $1.50, $1.60, and used the lows as your stop, which would have been about $1.40, $1.35. So you could have been risking anywhere between 10 and 35 cents to make potentially $4, $5 on this trade, depending on what your stop loss is going to be. In this case, you could have used the 10-day SMA on the daily. You could have used the 20-day simple moving average or a weekly time frame as your stop loss if you want to allow more wiggle room. But fact of the matter is, when you're risking 20 cents on a trade, when you're making $5 on it, it's a huge trade. This is an account building trade, an account building setup. As you'll see throughout the video, there are many of these good setups that show themselves at the end of a bear market once the bottom is already put in and consolidation begins. Here you'll see SNBR down 98.8% from the lows and then ran 3,800% from its bottom. Its cleanest setup was clearly over $1 here. When you zoom in, you'll see that after it made its move from the lows, it built these little higher lows, got in a super tight range before the breakout. You're in a range of potentially 5 cents some days, 10 cents, and you have 1, 2, 3, 4 days before it broke out here. You could have gotten in, either of these days. You might have gotten stopped out one of them, but when you're risking 10 cents on a trade, even if you have a small account, and it breaks out to this extent, you're going from $1 to $10. You're moving 1,000% on a breakout. It's a huge move. Now, you're not going to hold your whole position throughout that move. You're going to take profits. But even if you have a 25% position left or a 10% position left on 1,000% gain, it's a huge move and a huge account builder. Some of the same setups that worked for stocks over $1, just because some people are more comfortable with stocks in higher price ranges. TEN here was down 97% from its highs. You don't catch this bottom. The bottoms are very hard to catch. You wait for it to move up. You wait for it to consolidate here. It moves up the lows, consolidates in a tight range. Simple moving averages catch up, breaks out. Builds a flag again, breaks out again. So you don't even have to catch this one if you want to be even more safe. I don't know, for whatever reason, maybe you missed it. There are always more opportunities. It builds higher lows here, tighter and tighter range, simple moving averages, breaks out. It's like a broken record. LZB, same concept, from $10 to 50 cents almost. Makes a big move up off the lows. You'll see here, big move up off the lows, consolidates, flags here, maybe not visually as clean, but puts in a tight range, allows for the moving averages to catch up, breaks out again. TECK here, another example, puts in a double bottom, makes a big move up, breaks out again. There were clean setups in here as well. As you can see, when it moves up here, you might have a flag here. But the cleanest one for me, and my setups personally, is right here. Builds higher lows, tight range, moving averages catch up, finds support on these moving averages, then breaks out here, on a tight day where you can get in around $17 with a maybe 50-cent stop, if not less. And it breaks out cleanly to $28. So you have a huge move here. You can use your stop with one of the moving averages. Maybe you get out the rest of your size here at 26 bucks and you wait for another setup. As you can see, I've documented quite a few of them. There are many more of these. This is just for the 08 crash and just for my setups. The whole concept is that you can wait for the bottom to be put in, wait for the move off the lows, wait for the consolidation, and however your setups are, however you trade, there will be opportunities besides finding the lows. If you enjoyed this content and want more, please follow me on Twitter, leave a comment in the comment section, drop a like and subscribe. Let me know in the comments what else you want to see as videos, and thanks for watching.